Good morning, Tuesday, July 29th. I'm Zach Howard. Here's my morning market notes. Start today. What are we looking at? U.S. equity markets to start. We're into the prime of earnings season. So far, we've had 34% of the companies in those 500 companies report and better than expected, which is the traditional Wall Street narrative. Lower guidance and beat. But revenue, which is the easiest metric to say is company doing better or worse, continues to go higher. 80% posted positive revisions. So that is the highest since 2021. Rate of change of growth, rate of change of inflation. That is where the macro regime is going, which is a bullish outlook, which has been my biases here for at least a month or more for Q2 into Q3. Year over sales increased 5%. 6.4% earnings growth. However, we had the mecca of earnings starting after the market closes today into tomorrow before we get the central bank parade. We have over $11 trillion in these four tech companies, these AI companies, these leaders, where the world is going. They're going to report what they had to say on their earnings call. Most interesting to look at the guidance they give for capital expenditures related to AI and technology. Can they continue to keep pace with the massive growth we're seeing in that segment? But let's see what happens when they report later this week. On to yesterday's fiscal announcement out of the U.S. Treasury Department, U.S. government, the QRA, the quarterly refunding announcement, where the Treasury Secretary Treasury Scott Bessent and his team says how they're going to borrow the money to keep the biggest business in the world, which is the U.S. government, going here into Q3. $1 trillion is the new Q3 number, what they're going to have to borrow, a massive $453 billion increase over what was already a high number. Not surprisingly, this is what the model of the game is. Doesn't matter left, right, blue, red. You're all on Team Fiat. That's the game you're playing, okay? We need to continue to have constant debt creation, and the government takes on the debt. The private sector is the creditor of that. And we have number go up. Number go up in stock market. Number go up in debt borrowing. Number go up in everything. Number come down in debasement. Debasement of the currency. That's my theme here on this channel. I keep talking about understand the game. This is what the game is forced upon us. We had no say in the matter. It's just the math. The math continues to massively increase. Interest cost here more than doubled since 2020, over almost $1 trillion here in 2025, projected to be 2.2 trillion in less than 9 years. That's if interest rates stay low. What about if interest rates blow out and the government can't get their debt refinanced, which is the potential for yield curve control? One of the other themes I keep harping about, the debt spiral. That is where you'll see when it actually starts to happen because of the math. Gold goes up $100 to $500 in a day. Bitcoin goes up 5,000 to 10,000 a day. That will be the outcome when that eventually happens. To continue to say out of quiet part out loud. If you watch out the theater with Bassett, Trump, Powell, it's the same thing. But look at this charts here. Some great charts here from Gold Charts RS. Looks at the fiat depreciation and all those major fiats, whether it's the Japanese yen, Great Britain pound, CAD, Australian dollar, euro. It doesn't matter. It's the same constant theme. Look back to 1971 when the US came off the gold standard. There's no tether to all this fiat creation, okay? The red line in each currency is the debasement. The price in gold is the blue line, which cannot be manipulated from a physical demand standpoint like the fiat. That is the denominator. That's what we're playing against. And to an alternative to all that besides gold is Bitcoin. That is an alternative to this fiat madness. Bitcoin is in this consolidated range, 116 to 120. Why is that? People want to look for the why. It's the volatility. I keep talking about volatility. You get the volatility compressing, coming down. The price range from day to day doesn't have as big a band, 116 to 120, because we're in this realized volatility level on Bitcoin, which is massively historic low, almost 26 here, puts it in the 1-year lows, percentile 7%. It's even lower than the IBIT ETF from BlackRock. So lower volatility continues to be the theme for the summer. Compressed range, bullish trend. When does it break through 120? Probably when Sailor hits the buy button here on his next big buy or somebody else. That's what I got for you today. See you tomorrow. Have a good one.